Today is Let's Talk Credit Thursday. And in this video, I'm going to talk to you about if I had to rebuild my credit today in 2026, what would I do? Y'all stay tuned. I want to welcome you back to the Starr Personal Finance channel. If this is your first time joining me, please consider being a subscriber by clicking on that subscribe button. Make sure you guys are liking the video, leaving me some comments and sharing, doing all the things that's going to help this video get pushed out into the YouTube algorithm. That way other people that might want to see this content can be able to see it as well. I do appreciate all the love. Let's get into today's video. So what would I do today in 2026 if I was going to rebuild my credit? So first things first, guys, make sure you get yourself a notebook, something that you can write down these steps, especially if this is something that you're looking at doing or you know somebody else that might be doing it. Make sure you share this video. So let's get into step number one. So the first thing we're going to do, we're going to pull all 3 credit bureau reports, right? We're going to get all our reports from annualcreditreport.com. Again, that's annualcreditreport.com, where you can get your actual credit report, the actual, however many pages it is. You will be able to pull your actual credit report from all 3 credit bureaus. We're talking about Equifax, Experian, and TransUnion. That's the first thing that I would do. By using annualcreditreport.com, you will not be paying anything for those credit reports. Now, if you do want to pay for your FICO score, maybe a FICO 8 score, then that's when it will charge you if you want to get those scores. But just to get the credit report, it should be for free. So once you get your credit reports, I'm going to put you in 3 different categories, okay? So you have a category where you have your good accounts, your accounts where you are doing well, you're making the payments, minimum, whatever, you're paying them on time, you're paying them as agreed. So you want to list those good accounts, right? Now, if you don't have any collection account, then you don't have to go to the next steps. But if you are in good standing, you might just have some maxed out things that you need to get your debt to income where it doesn't look like you are very risky because you're just paying the minimum and you have maxed out things. So now you want to revert from that, right? You want to make sure that you don't look risky, because that's what all credit is about. How risky are you on a scale from 300 to 850? And you want to fall as close to 850 as you possibly can. The next category is okay standing. So when I think about okay, I'm thinking about I missed a couple payments, or I missed a payment, but I'm not 30 days late on anything. I just might have missed a payment 30 days. I haven't got into 60 days. Or if I did get into 60 days, you know, I just missed payments, but nothing is in collection. Nothing is written off. You just got some mixed payments. You may even have some maxed out cards. I want you to list those. And the last one is the not so good category. That means that you have gone into collections. You do have some things that's written off, whether it's medical debt, you know, or maybe you had to charge off one of your credit cards at some point because you couldn't afford to pay it. Whatever it is that's in collection, that's the not so good. So I want you to list those accounts. So depending on where you fall at, if you're in the good standing, the okay standing, or the not so good standing, it depends on where you're going to go on your step 2 part. So if you are in the good standing part, then that means that you just got stuff that's maxed out, but you haven't missed any payments. You don't have anything in collections. So what you want to do is you would want to just pause. You will want to pause on getting new credit, because right now you don't look good because you got things maxed out and you want to not look risky. Remember that. Risky, 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 right? So no risky business. So what you want to do is you already have established credit. You want to work on bringing those balances down back under 30%, back under 10%. So you may want to use the snowball method of payment to make those payments and get those things down. If it's an income issue, you may want to look at bringing in more income, of course, by doing gig work, ride share, anything that you can do that may help you bring in some more income if that is causing you to stay maxed out. But you would need to change that behavior before you start doing anything else with credit, because you'll probably get turned down. And then you have a whole bunch of inquiries that you'll need to fall off. And so you don't want to do that. You just want to wait until you're more favorable by paying some of those accounts that you already have that may be maxed out, just paying those down. That's the first thing you will want to do after you pull your credit reports and you have those accounts listed. Now, if you're in the okay standing category, meaning that you have missed some payments, but you're back on track now, you don't have any more missed payments, what you want to do is you want to do just like the good standing people, where you want to continue to pay. Let's get those balances back down. Let's not apply for any new credit because we looking real risky because we have missed payments, right? We look even riskier than the maxed out category, right? We want to look as good as possible because, like I say, it's all about the risk. Make sure you keep that in your mind. That's why I keep saying it over and over and over again, because how risky do you look? So we want to make sure that we are lowering that risk factor as much as we can by paying our debt. So if you do have some missed payments, let's go ahead and get a plan to make sure that we're paying our things on time every month. And we're going to do that for at least a year. We're going to do that so that we can go to our creditors after a year and say, hey, I had some bumps in the road. I changed jobs, got a divorce, whatever the case may be, while you missed a couple of payments. You want to then go to those creditors and be like, hey, I want to give you a good faith letter that if I continue going forward with no late payments, will you consider taking these other late payments that I had over a year ago off my credit report? And that will improve your credit score. All they can say is yes or no. So if they don't give it to you, then you're still in a good standing where you're getting away from what we consider an event. The event occurs whenever something negative happens. And the further you get away from that event in time, then it lessens more on your actual score. It won't impact your score as much as when it first happened. So you can just continue to do things right going forward. Whatever caused you to miss the payment, correct that activity and make sure that we're doing better going forward. Not being over leveraged, all those types of things, okay? Now, if you are in a not so good category where you do have things that's in collections or written off that's on your credit report, we first want to think about rebuilding in a more secure way, because you do look risky because you have things that are on your credit report. Hopefully they're not credit cards and loans and stuff, because that looks even worse. If it's doctor bills, it just depends on the lender, but we still want to start forging ahead to start making some positivity go onto our credit report. My suggestion is, if you're not already a member at a credit union, that you join a credit union. Join a credit union that preferably has secured options, like a secured credit card, secured loans, or some people call it a pledge loan if you look at Navy Federal videos. So if you want to join a credit union that has options that you can actually secure with your own money to establish your credit or re-establish your credit, right? And then once you're in the process of cleaning up all the things that are negative, you might have to go and do some validations, validating some of the debts. Also, you may have to do some pay for deletions, selling some of those debts. You just have to go through all the things when it comes to collections, right? But it's not the end of the world. Like I was saying before, once you get past a certain event, it lessens, right? It lessens and your score can rebound, but you do have to have some positivity going into it. So that's why I say join a credit union if you're not already there, and let's start building a relationship. I wouldn't say try to get a secure card the first month you join. I would say join the credit union, let some money come into the credit union, start using their services, like using their debit card. Make them your primary bank if you can, but you want to start using their card, using their debit card. When I say using a card, using their debit card, using their online, going inside of a branch. You would never know how much that really helps when you can go inside a branch and people get to know you. I worked in credit unions for over 10 years before I went to the traditional bank that I work at now. But even still, when you're able to go in and forge a relationship and people know you and you're coming in and they see you doing business, it really helps with that relationship, because you get to know who are the people that you would want to do some business with, like buying a car or if they offer mortgages, things like that. So having a place where you can actually go in is really great. But there is a lot of banks that's online. Now, Navy Federal, depending on, that's the biggest credit union. So if you do have a Navy Federal in your town, then that's another great credit union to join, because they do have the builder types of accounts that I was talking about, the secure accounts, but it is a little harder to get into Navy Fed. So it may depend on where you work at. you may have a credit union that will allow you to join just because of your job. So I don't want you to put all your eggs in the Navy Federal basket. I always tell you there's a ton of great credit unions out there. You just have to do a little research to make sure that they have everything that you're looking for in a financial institution. And I can't stress this enough. You just want to make sure that you don't look risky. So whatever you have to do, depending on where you at, are you in the good standing category where you have some maxed out cards? That's where I was at for a very long time. I didn't have any late payments, but I looked at horrible on credit. My DTI, debt to income, was terrible. So you just want to correct those things that make you look risky. You want to get away from the events. If you did miss some payments, you want to get away from those events so that they lessen the impact on your actual credit score, right? And if you are in collections or have some things that are written off, we're going to validate those debts. We're going to talk about pay for deletion, settle those debts, you know, for less than what you owe, all the things like that to help you get your credit going. But you definitely want to make sure that you don't look risky on paper. That's all it's about. Not looking risky on paper, making sure that you have the income that can back up whatever it is that you're trying to do. And that way you won't have to worry about denials more. But you just want to take your time. I always tell people to have credit goals when it comes to their credit. I did a video about that and I'm gonna link it above, to make sure that you are setting goals for what you want to do with your credit. I don't want you to go out getting a whole lot of builder savings accounts and getting Chime credit builder. No, you need to be in with a good financial institution that's going to help you when it's time for you to get another car, when you want to buy a home, when you want to get a good interest rate on a personal loan, you want to get a good interest rate on a credit card. You want to go to financial institutions for those. You're not going to get those a lot of times with some of those credit builder things and a lot of those things. You want to do stuff traditionally when you want to get really excellent credit. All right. So those are the steps that I would take. If you have any questions, just let me know down in the comments. I really would like to hear from you. And if you like this video, please guys, give it a thumbs up, like it, share it. Let me know how you think or feel about this video today. That way I can continue to give you more educational content on the channel. I really do appreciate it. And if you're interested, look at this video that's coming up next.